Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some beaten up FTSE 100 stocks over recent days and weeks, and what we may be able to learn from them, if anything. Starting with Rolls Royce, and you can see that there was a typical unfilled gap to the downside on the latest news from the company. Um, really a sort of a vicious move and typical of a trend changing situation for a stock or market. Normally above the 200-day line, we're in bullish mode, and below it bearish. So a simple situation here that we flipped into a very negative situation. The other issue here is also that the new resistance after the break was former support between October and August around the £11 mark. So really we need to break back above that as a minimum requirement in terms of the bull argument. But in the meantime, you can see that the start of the rot here was really a bull trap. Failure below the 20-day moving average shown here in grey as a bear flag, and then the two main failures in January and February below the 50-day moving average at £12.18. So everything there sort of hinting at a decline, but obviously the magnitude of the fall was something that was not flagged by the chart. Another aspect to look at was the falling resistance line in the RSI window, but again, really, this shows that the more that the bulls or the traders were caught on the hop rather than actually anticipating such a severe move. The only plus point really here at the moment is the way that you'd be looking to buy on any dips towards the lower parallel here of the April descending price channel. So down towards £10 as an intraday dip would still be attractive in terms of going long here. And you can see that £10 level was former support in February last year as well. So a possibility to go long around the £10 area with a stop of say 20 to 30 pence at most. But really, we need to break back above £11 to sort of start to unwind the negative message that we've seen here. Moving on to Tate and Lyle, the sugar group, and here we have a similar breakdown, a very sharp one. As you can see, the intraday high of after the gap down was well below former September-October support around £7.40, £7.30. So this is an emphatic move to the downside. In fact, here the 200-day moving average became resistance well before the break. Bull trap through the 200-day line in November, then again at the end of December, and we have the 200-day moving average now falling at 802 pence and well above the current price action. As in the case of Rolls Royce, though, you've got a possible bargain hunting point towards the floor of an April price channel at £6.50. That explains why the shares have bounced slightly, and there may be another opportunity to go long towards £6.50, maybe job that out towards £7 in coming days. The final stock here that I wanted to look at was Centrica. Here, the breakdown here on break up fears from the government. So quite a big threat over the company, but it does look as though perhaps some of the worst of these fears have been absorbed by the market. Again, an April price channel, falling price channel, heading towards the £3 level. The exact level was down to £3.02 on the 10th of February. And that really is the pivotal level at the moment. What you can see here also is an interesting charting configuration in the sense that the price action of the 10th of February was a hammer candle, a very emphatic island day bottom there for the stock, and we gapped up from that. And really, the high of that day was 308 pence. And you'd be looking to go long with an end of day close stop loss back below that and targeting the 50-day moving average at £3.26 as the minimum. Ideally, we'd get back up to the top of the April channel as high as £3.45 over the near term. So a sort of hope there at Centrica, a hope value for the bulls. There's also bullish divergence in the RSI window as well to take note of and help the price action. So out of the three, probably Centrica is the one you'd go for in terms of bottom fishing. That's it from me. See you again next time.